to be honest, I completely bought into the hype, and actually I was wrong about a couple of things in particular, and that might stop the complete avalanche of investors who are leaving the property market. But here in our head kicking in, you've got to control that. You've got to look in the cold light of day, what are the opportunities? There are opportunities right now. The cash flow from that property, save it over a period of time, and that can be some or all of your deposit to actually buy the property. And here's the big one, we don't have to pay the 5% stamp duty. Whereas this way, we can help them earn more money than they would if they sold and put the money in the bank. And also, hello and welcome to this week's episode of the Property Magic Podcast. And of course, in this episode, I can't talk about anything else apart from the recent Labour government budget. This was the first Labour government in the first 14 years. It was really important. There was loads of hype, and to be honest, I completely bought into the hype, and actually I was wrong about a couple of things. In particular, I was wrong about capital gains tax. I and many other people expected capital gains tax seemed to be an obvious area that the Labour government could target to tax the wealthy so that we take the burden of the tax increases. £40 billion of taxes are going to be raised by the changes to the budget. However, not in some of the areas that we expected. So first of all, this capital gains tax, it's a tax we pay when we sell an asset we've made a profit. So it could be property, it could be shares, it could be cryptocurrency, but the government previously, the Conservative government, made a differentiation between different types of assets. So for property, residential property assets, they would tax you at either 18% if you're a lower rate taxpayer or 24% if you were a higher rate taxpayer. And we expected those rates would go up in line with normal income tax. So maybe up to maybe 20% for a lower rate taxpayer and 40% for a higher rate taxpayer. Now, one of the reasons I thought that might happen was because obviously we thought it would raise more taxes, but also there's a possibility that if someone's going to have to pay 40% tax, the investor who owns that asset might say, well, you know what, it's not really worth selling that asset, I'm just going to hold it. And that might stop the complete avalanche of investors who are leaving the property market. Because as investors sell their property, we've seen this growing trend of the last 7 or 8 years since the Conservative government first announced plans for Section 24 back in 2015, which then came into place in April 2017, which is where we as property investors are taxed differently if we own property in our own name, if we have mortgages and we're higher rate taxpayers. So we pay a lot more tax on our property income. So because of that and changing legislation, over the last 7 or 8 years, we've seen landlords selling up their properties. And I thought that if we went up to 40% corporation tax, that might slow down that rate of sale. However, having done lots of research and analysis on this, it looks like HMRC have run the numbers and they've worked out if capital gains tax went up to 40% for high rate taxpayers, they'd actually get less tax revenue for that very reason, because people would decide not to sell their properties. So I think that's why the Labour government have not changed the capital gains tax rates for residential property. What they have done instead, which I think is very clever, they've said, well, for the other assets, which normally you'd pay 10% as a lower rate taxpayer and 20% as a higher rate taxpayer, they brought those in line with the residential rates. They've brought those in line with the residential rates. So now, no matter what asset you're selling, if you've made a profit on it, if you're a lower rate taxpayer, you're paying 18%, and if you're a higher rate taxpayer, you're paying 24%. So I guess it's good, it's consistent, but the government are going to make a lot more revenue from that raise they've made to the non-residential property assets. So what does this mean for you, and what does it mean for me as property investors? I think we're going to continue to see lots of landlords deciding, you know what, enough is enough, I'm going to get out of the property game. Now, we always have some people retiring from the industry and some people new coming into the industry. It's just there are more people retiring than there are people coming into the industry. So what this means is that there's probably going to be a fall in the amount of rental property available, which is going to cause a bit more of a shortage. There's already a shortage, so actually rental rates might go up. Now, obviously, affordability is a question. However, the government has increased the amount they're paying for minimum wage. It's a 6.7% increase, which is an inflation-busting increase. And also, I'm sure lots of other people who are paid by the government, civil servants, etc., are also going to see a pay increase at more than inflation. Now, what this means is two things for us as property investors. First of all, People who might be living in our HMOs, blue-collar workers working in factories, warehouses, guess what? They're going to have a little bit more money in their pocket. They might be able to afford a little bit more rent in our HMOs. So if there's a falling supply and an increasing demand, actually maybe we can put our rents up a bit more without worrying about affordability issues. Rents have gone up a lot over the last couple of years, and they can only go up to a certain point where suddenly it becomes unaffordable. But with this increase in minimum wages and the ripple effect that's going to have within businesses, I think actually we're going to see more people being able to afford more for their accommodation. However, I also think because of the change that the government have brought in to national insurance, where now companies are paying more national insurance, they're going from 13.8 up to 15% national insurance. I think many companies might be careful about the number of people they employ. They might get rid of some of the not so good employees and focus on just the really good employees. And so because of that, we might see a slight increase in unemployment, so more people on benefits, and some of our tenants might actually lose their jobs ultimately. So that's another little consideration that we need to think about. Now, the really big unexpected tax increase was the stamp duty. Prior to the budget, as investors, we would pay 3% extra stamp duty. And by the way, overseas investors, many of my clients from the Netherlands and Dubai, they're already paying 5% stamp duty. Now, I remember that when this first came in, I think it was back in 2016, there were many people saying, well, that's it, investing doesn't work anymore. If I have to pay an extra 3% stamp duty, that the prices just don't work, I'm not going to invest. But what happened was we just adapted. And we now factor that extra 3% into the price, knowing we're going to have to pay it, we negotiate harder. And exactly the same thing is going to happen. There will be a bit of time where people think, oh, I'm not sure if I really want to invest in property. People are going to have to get used to that 5% figure, but eventually that's going to happen. What that means is that now there is an opportunity. Now, there are lots of landlords who are still going to move forward with their plan to sell their properties, but with less people wanting to buy because they're trying to get their head around this 5% stamp duty, there's going to be less competition over the next few months. So I really do believe the next few months, the last 2 months of 2024, is going to be a great time for you to be going out, finding and securing really good property deals. And remember, as we get closer to the end of the year and we get closer to the festive period, if you're speaking to a seller who's been trying to sell a property for a period of time, and we say something like, look, how would you like to get a deal done and this property gone before Christmas? That is a really strong psychological anchor you can use to get them to agree to a deal, because they would love to get their property sold. They'd like to get this problem resolved in their head. They probably won't get it completed by then, but maybe you could exchange or at least have the deal agreed so they can sit back, relax and enjoy their Christmas, their festive period with their family, knowing that that property problem is not going to be there anymore in the new year. They've solved the problem. So it's a really important thing. And whilst many people might be stepping back, taking a bit of time off over the December period, it's a really good time for you to ramp up all your activity. I'm telling all my mastermind students they need to double down on their activity, because there will be some great deals to be done this November and December if you get out there and take action. And really, it's interesting that whenever there are announcements about things that could happen, there's often panic. And actually, there's often a knee-jerk reaction of people worrying, and there were lots of people trying to sell properties before the budget. And I myself thought that rates were going to go up for capital gains tax. I bought into that. I thought, yeah, that's an obvious tax they're going to do. Obviously, I didn't know that the HMRC had done their calculation to work out they'd get less tax revenue from it. So the point is, there's always emotions, and sometimes people make decisions and emotions are not good. And you want to try be a bit more stoic. You want to kind of allow things to happen and then look back and say, okay, what does this actually mean? How can I use this? What's the advantage? Because stoicism is where you look at things in a way that a challenge might happen that might throw people off the rails. We look at, okay, what's the lesson here? What's the learning? And more importantly, what is the opportunity? And I think right now there is a huge opportunity, particularly for the next few months. I expect we might see the Bank of England base rate come down again one more time before the end of the year. So it's going to be mortgages are more affordable. I think luckily this budget has probably been received okay. It's probably not going to have that much effect on the mortgage market. It's going to be other factors that are going to affect the Bank of England's decision. So I expect the rates are going to come down, but I'm going to do another video about that at some point. And so my message really is, Things happen. Don't worry about them till they actually come in, because often we worry about things that are not going to be happening. They're not realities, and that's often fear in our head kicking in. You've got to control that. You've got to look in the cold light of day. What are the opportunities? There are opportunities right now. Now, I think what I'm going to be doing personally is I'm going to be trying to do a lot more purchase lease options. A purchase lease option is a great strategy that we can use to control a property where we're not having to buy it right now. We have the right to buy at some time in the future. But in the meantime, we look after the property for that landlord who really doesn't want the hassle anymore. We pay them a certain amount of income each month and we rent it out for more money. So we make a profit each month on a property that we don't own. And because we have the right to buy, we also have the potential to gain from capital growth on a property that we don't actually own. Now, why are these so powerful? Well, first of all, we don't need to put in a big deposit, and that stops a lot of people moving forward. We don't have to get a mortgage, which might take 3 or 4 months at the moment. So it means we can do the transaction very quickly because there is no mortgage we need to get. Either it might be an unencumbered property, or if there's a mortgage on it, we just start paying the mortgage for that property owner. And here's the big one. We don't have to pay the 5% stamp duty because we're not actually buying the property now. Now, in the future, we might have to pay that stamp duty, but here's the point. Because we're making profit every single month from this property, we could save that up to cover the extra stamp duty. And if it's a very profitable property, sometimes you can even use the cash flow from that property, save it over a period of time, and that can be some or all of your deposit to actually buy the property. Or if you've had really good capital growth, as we might get over the next 5 years, I think the market's going to recover because we have this supply and demand problem in the UK, i.e. we do not have enough accommodation and we have this increasing population, mainly due to immigration into the UK. The demand is going up, the supply is not going up fast enough, so that means prices of rents and values also go up. So if the market goes up, and especially if you're adding value to a property to help that increase in value, there's a good chance the increase in equity can actually be used as the deposit for when you buy the property. So again, using purchase lease options in the correct way, you don't actually need a lot of money now, and even when you come to buy the property, depending on what's happened to the market, depending on the rental income, again, you may not need money to actually buy that property. So this is why I believe options are such a great strategy to use. Now, when we do an option, it's important we do this with someone who doesn't need the money right now. And many of the landlords who are retiring, who are getting out of the market, they don't need the money now. They just don't want the property. They don't want the hassle. So when they sell a property, they'll put the money into the bank, probably earning not very much money for them. Whereas this way, we can help them earn more money than they would if they sold and put the money in the bank. And also, we can help buy at the full market price. Now, why is this important? Well, most people buying right now, because it's a buyer's market, will want to buy at a discount. Most landlords don't want to sell at a discount. They want to get the maximum they possibly can for their property. So if they're flexible about when they get paid, we can give them the price they want, which is a huge benefit for them. They get rid of the hassle of property. So in the right circumstances, when we know how to find these people, an option can be a complete win-win for us and also for the property owner. This is not just for cheap properties up north. I'm living in an option property myself in Birmingham. It's a £1.5 million property. So by the way, you can live in options yourself as long as you can afford the monthly rent. You can live there and live in a better house than you might live in right now, in a better area. It's a great way to get your foot on the ladder. But as an investor, we can also take on options and we can rent those out and get a really good return on those. So I hope you understand this is a great strategy. Something we do very, very quickly, and many of my clients are going to be securing options before the end of the year. If you want to learn more about that, I'm doing some online training, so click on the link below, come and register for online training with me to find out how you can make the most of the current property market and how you can use purchase lease options in your investing going forward. Until next time, I encourage you to invest with knowledge, invest with skill. Of course, if you're watching on the YouTube video, please make sure you like this video. Come and comment below. What's your thoughts on how are you going to move forward with your property investing? Make sure you subscribe to the YouTube channel and hit the bell icon to make sure you get notified whenever these videos come out. Videos like this are very timely. There's action for you to take. There's opportunity. You don't want to be watching it 6 months after it's come out. So make sure you subscribe, hit the bell icon, and you'll get notified anytime when the new videos come out. Until next time, I encourage you to invest with knowledge, invest with skill.